Hi, welcome back to the channel. Now, in this month's analysis, I am going to walk through a really high level broader market overview. I'll cover all of the major indexes and asset classes. I'll cover mega cap tech. I have around 20 individual stock ideas for your watch lists going into April. I've also prepared the key charts that will help you get defensive ahead of any potential correction when it arrives as well. Now, it has taken around 20 hours as usual to prepare, present, edit and upload, so I do hope you find some value from my hard work. For those of you that are new and just stumbled onto my work, hopefully the Scottish accent isn't too difficult to understand. But before I get into these charts, the market over the last few months has been absolutely incredible. If you've been working with my charts and analysis over the last few months, hopefully the ideas and my work have helped you in some sort of meaningful way. We've had an environment for the first quarter that's been led by most of the major big mega cap tech hitters, the likes of Nvidia, Microsoft, Meta, and everyone's told us that only 7 stocks have been going up, or it's only been AI stocks that are going up. But I will be correcting quite a few assumptions this month, but regardless, I think the way that I learned it is the best players should really score the most points. That's how mega cap tech works. They're obviously the biggest cap weightings in the major indexes. But I will be walking through some of the rotations that we're seeing. Some of the smaller beaten up areas are now starting to look quite interesting. But as always, for disclosure, myself or my clients may already hold some positions in some of the names mentioned, but I have highlighted those disclosures on the charts. If you are new around here, I like to use a combination of technicals and fundamentals. I'm a huge advocate of systematic process. Most of you know by now that I do not use the magical hindsight indicator. I timestamp absolutely everything, which is massively important in my field. I'm one of the very few who go on the record with their work. But my work is generally for everyone. I think if you're an everyday investor, trader, options trader, financial advisor, money manager, my charting style is very unique. I'm able to identify market bottoms and obviously market tops and the strongest stocks and the weakest stocks that are potentially looking to catch a bid. So the one thing that I would say is that my work isn't really geared towards buy and hold forever, unfortunately. But I am looking for structural trends in the market that last weeks to months, and I like to use logical price targets. If we sat down and had a beer, I tell you that I'm personally more of a technical investor, but like I said a moment ago, my work does apply to most styles, and I'm told my work's of the absolute highest quality. I do have clients at most of the major investment banks now. But please do pause the video. Very important disclaimer. Don't forget to smash the like button and subscribe. It all helps with the YouTube algorithm and helps to get my work a little bit more noticed. And at the end of today's video, I do have a big announcement to make, but I think the best thing to do is really just get into these charts. But actually, let me take a step back here, because I think the big rotations that we're seeing in the market are catching quite a few folks out at the moment. But obviously we've come to the end of March, and when we get to the end of the month, I like to just have a look at the data just to see what the market has actually done over the course of the month. I try to stay away from thoughts and feelings as much as possible. But when we zoom in here and we have a look at the performance of a lot of the major indexes, we can see that the mid caps have led the way with a 5% move. We've had the equally weighted S&P 500 outperform the S&P 500 4% versus 3%. The Russell 2000, which if you picked up last month's analysis, I did highlight that we were potentially about to take the next leg higher there. I will be updating that chart for you in just a few moments. Also, it's not just the US markets. We can see with some of the overseas markets, Germany, the UK, China, it's really been a move across the board. It's not just been the US markets, and of course we can see the rips higher that we've had in Bitcoin and Ethereum, which have massively outperformed as well. So I think that there has been something for everyone. But this is the data that I like to use. These are some of the charts from our ETF chart book. And we can see, obviously, the gold miners have been absolutely massive. The silver miners, massive outperformance over the course of the last month. We can see the oil, the energy markets, the home builders, metals and mining. And what you'll notice here is the names that I'm mentioning here, as we go down the performance list, you can see that most of them are cyclical names: materials, energy, metals and mining. We're not seeing a lot of the growth tech names, areas of the market outperforming. So there has been a very definite rotation over the course of the last month. The equally weighted S&P sectors also give us some clues. We can see that energy and materials, utilities, financials have all massively outperformed, whereas we can see when we equally weight all the technology stocks, very broad underperformance from technology. And the big question I think everybody has is, well, what can we expect obviously going into April? And I will be getting into that in just a few moments. Commodities, again, the agriculture, DBA, if you follow me on Twitter, I posted the chart around mid-month, and it's just broken out and absolutely ripped higher. But cocoa, if you haven't seen the move in cocoa, 61% move, it's just broken out. It's doing that parabolic thing. If you think Nvidia's went parabolic, you should go and have a look at the cocoa chart. But they're really, again, this data just speaks to the fact that there has been something for everybody. But I think if you are out there and you are looking at the numbers and the data, and you've maybe got a bearish outlook on the market, listen, I get it. The economy, the cost of living crisis, etc. I see it all. But something I like to just use is the charts, because the charts are quite often a really good signal. And this is a chart that I've been covering for the last few months on my YouTube channel, just highlighting that the signal to perhaps start to look for a risk-off environment is when the yield curve starts to steepen and uninvert. As we can see historically, it has been a very good signal to start to think about defensive action. And I think what you're finding with a lot of the economists is, I think the economists are looking at the yield curve, seeing that it's obviously we are inverted, and not realizing that the signal is actually when we come out of the inversion. So you've got a lot of these bearish economists that have just sat out the market for the last 2 years because of this chart. But it's actually when we come out, that's the signal. So something I'm watching very closely. But it is very difficult to be bearish on the broader market when we are seeing all of the major indexes going out at new all-time highs. The NYSE composite. Now, one of the charts that I like to use is one of the signals again I like to use to get defensive is when we put in failed breakouts in major indexes. So if we do see the NYSE composite fall off a cliff, you want to see any pullback hold on to previous all-time highs. The same message with the Russell 3000. Again, you want to see these breakout levels hold on any pullback. I think using the NYSE composite and the Russell 3000 is probably a better gauge of the total health of the market. We know the S&P 500 is hitting new all-time highs most weeks at the moment. I am just using systematic process here now for the S&P 500. I don't like to second guess things and call market tops, etc. I do like to wait for some kind of technical signal, which I've had on every correction and crash over the last 6-7 years. So I'm not seeing anything massively bearish at the moment. Again, like I said a moment ago, we are going out at new all-time highs, but just to show you why I like to kind of use the failed breakout as an early warning signal for any potential corrective phases in the market. There's obviously a couple of examples here. Again, for those of you that are maybe looking and maybe learning at the moment, market bottom calls aren't easy either. It's really an intermarket relationships, etc. But if you go and have a look at what the US dollar was doing around October 23 and the 200-week moving average in October 22 as well, those were tradable bottom signals, but we are currently making new all-time highs again in the S&P 500. We're seeing the same thing with the Dow. The triple Qs again consolidating over the last month. This speaks to the underperformance in tech, but very, very perfectly healthy, very normal digestion of gains. I love to see small periods of consolidation before the next leg higher. I think it's a lot healthier for the longer term trend of the market than all of these parabolic moves. So I'm very comfortable with what I'm seeing currently in the triple Qs. But this is the next two charts are the charts that I am most interested in going into April. We know that the market is full of rotations. I'm sure many of you have been caught out by the rotation out of tech into cyclicals last month. But next month, I'm looking for some kind of move in a lot of the beaten up crap. I think the Russell 2000 potentially looking to break out. So if there is follow through when the market resumes next week, I am recording this on Good Friday. The market is closed for the day, which I'm sure most of us are enjoying. But I'm looking for the Russell 2000 to potentially break out. I'm also looking at the micro caps. So if we can get some kind of definitive follow through on these moves here, the micro caps potentially taking out key levels, which the AV WAP from the COVID lows, which we can see has been a problem over the course of the last 18 months. But we are potentially looking to take this level out. I think if there is follow through on that, then I think it could be good news for a lot of the high beta names, which have, I should add, already broken out. Now, obviously this is a longer term monthly chart. I'm just highlighting this just to emphasize that it has broken out. A 50% move in this particular ETF could take a couple of years. It's not one of those that I think you can go and trade and expect it to hit 50% targets in the space of a few months. But it has broken out. I am also seeing positive data in the high beta versus low volatility. This is a ratio chart, which again just helps me to gauge whether or not we are in a risk on or a risk off environment. So if we see the high beta stocks break out relative to low volatility, which you can see the data over the course of the last month has shown us that there is outperformance again from the high beta names. This is probably in an environment where we are seeing those small and those micro caps breaking out to the upside. But for me, still the most important chart in finance is the US dollar index. As we can see, a weaker dollar is generally good for stocks, a rising dollar bad for stocks. But something that I am starting to notice here is that the S&P 500 has obviously been ripping higher over the course of the last few months. But I am also noting that the US dollar index is rising as well. So I'm actually looking at this and starting to question, maybe we are starting to uncouple from this inverse correlation. So that's something that I'm going to be watching over the course of the next few months to see what data and what it means for the market. But the US dollar index at the moment, on the individual chart, it does remain range bound at the moment. I don't know what direction this is going tomorrow, next week, no clue. It is range bound, so we'll need to see how this develops and if it can break free of this big sideways range. The volatility index is still suppressed at the moment, so we are in the green zone. This is a very basic color coded chart that I like to use. When the VIX is north of 20, 25, that's a big problem for me, and generally that's an environment where the market is probably coming under a bit of pressure. The 10-year Treasury note yield, again, I still I'm working with the thesis that rates have topped. I made that call in real time back in October. Obviously, I'm sure the TLT chart is probably the tool that most use to express a bullish or bearish thesis. And again, I made a bottom call on TLT in October, 20% rally to the upside. I think it's a very, very perfectly normal, healthy consolidation. And I am, fully expecting this to go and test $99. But I think one thing that I am really good at is understanding where my thesis might be starting to fall apart. I'm not one of those that hangs on to a bullish or bearish thesis until the end of time. I think if the TLT chart, starts to break below those 92 levels, then that's probably in an environment where the 10-year note is also moving higher, which obviously rates. But gold has obviously been massive. Congrats to anybody that has done anything with the gold miners. I made some very, very big, bold bottom calls, buy low, sell high calls on Twitter over the course of the last 6 weeks. And gold has broken out, and we've now got gold miners now pushing against big levels as well. So that's an area that I'm really, really interested in going into April as well. Now I am about to walk through around, I've got about 25 individual stock ideas. I am going to touch on some of the crypto names as well, because I put out a tweet a few weeks ago that got a little bit of attention. But please do hit the like button, smash the like button, share my work with your friends, colleagues, etc. It all helps to get my work a lot more noticed. But individual names that I think we can look at. Now, I did say at the start I would highlight any disclosures. This is one of our premium client charts. But with NU Holdings, we are now pushing against those IPO all-time highs. I think if there's a breakout here in April, then I think NU Holdings could get quite interesting quite quickly. I did cover this chart last month for you on YouTube. We have now met our upside targets, but I have re-evaluated the chart. I've added on Fibonacci extension levels, and I think there's quite logical upside targets to aim for if there is a breakout. Now, PayPal is getting a lot of airtime. A lot of folks are looking at this as a great company that's been beaten to death. I think it's potentially starting to set up technically 9-month cup and handle pattern developing. So I think if there's a breakout there above 6 to 8, then there is a possibility that PayPal could get quite interesting. Now, Coinbase, obviously, with the whole moves in crypto and Bitcoin, etc., Coinbase has naturally caught a bid. Something that I found quite interesting that I didn't actually know until a couple of weeks ago is that Coinbase, and don't quote me on this, but I think they hold 90% of the Bitcoin for a lot of the major ETFs, etc. So For me, Coinbase could be one of those that has massive upside potential. Again, I did put out a tweet last week, a little bit of clickbait, just saying that I thought it was a potential $500 billion market cap, which is, of course, it's a crazy number to put out there. But the thought process I have there is a lot of fundamental catalysts, but it does need to kind of break out, and I think there's logical 37% upside in those previous levels around 365. We've also got Nvidia, lots of airtime. Obviously this YouTube channel, I gave you the breakout here at $500. It's ripped higher. It is still holding above its 20-day simple moving average. But I have just put out a tweet this morning just highlighting that the zoomed in chart indicates that the chart might be starting to range a little bit. The last time it did start to range, we can see it ranged for 4 months, which again is very normal, very healthy, very perfectly reasonable after big gains. But the upside targets that we still have, that I'm still working with, is still up around $1,100. Big base breakout there for Micron Technology on the back of massive earnings. But with the chart, this is obviously a big 20 odd year base that it has broken out of, and the bigger the base, the higher in space, as they say. I think any weakness, I think that the chart is probably due a little bit of a near-term pullback, but I think any weakness can probably be bought, provided that we are above that kind of 97 level. We've got Apple. Now, Apple has been a very, very challenging chart to say the least. It's underperformed the S&P 500 by 19% so far year to date. Apple has not been the place to be this year, as I'm sure most of you know. I take a very different view on dips in stocks like Apple. For example, last month I highlighted the Apple chart as a potential buy low, sell high chart. We did get I think it was a 7 or 8% rally, and then ultimately it fallen away again at big price levels. Again, I think this is weakness that you can look as opportunity in Apple. I think provided we are above that 165 level. This is a chart that I've put to our clients. I'm not one of those relative strength gurus that shy away from these buy low, sell high opportunities, because things like relative strength, and I'm sure a lot of the CMTs won't like me saying this, it's completely random. Relative strength comes in when it feels like doing so. So I like to try and identify relative strength at its source, not once they've already moved, the chart's already made 200% gains. So Apple, I think provided we're above 165, I think is fine. ON. Now retail in general, I think if you look at the Nike, Lululemon earnings reactions, very, very negative. ON, on the other hand, has actually rebounded really, really well. Not too keen on the shoes myself, but the share price, the chart, I think makes a lot of sense. If we can take out that 36.83 level, I think above that kind of 37.50 level probably would be an indication that it's breaking out, and I think there's around 50% upside there. Spotify has held up really, really well. But one thing I would say, and this is something that I've highlighted to our clients this week, with Spotify, if you have a look at the daily chart, there is a potential that we're looking at an exhaustion gap. It gapped up, I think, 4 or 5% earlier this week, and then it just completely sold off. That tends to be a signal that you can get at near-term market tops. So I'm just starting to question now whether or not we could be due some kind of pullback in Spotify. I am still bullish on Spotify, but I think for me it does need to hold on to that 250 level on any further weakness. Amazon, very, very close to hitting our upside targets here at around $190. as I'm sure we know, Amazon's explosive earnings growth, etc. And I think if you are looking for a new entry into Amazon, certainly above 190 would represent a breakout. But this is a stock that we've been bullish on for a long time, as I'm sure most of you have been as well. But that 190 level, I think, will represent some kind of level where you can expect some kind of digestion of gains. Now, for disclosure, one of our plays on energy this month has been Valero Energy. It's been an absolute monster. We are working with upside targets here still around 200 or 220. It'll be interesting to see what happens next week with energy and the oil markets. That's something that I'm obviously keeping a very, very close eye on. But Valero Energy, if you're not aware of the company, I'd suggest go and do some due diligence. It broken out of a massive 18-month base. I like breakouts above big Fibonacci levels, especially after prolonged periods of consolidation. And Valero Energy is doing its thing at the moment. Netflix, it has done all right this year. It's up 13%. It has outperformed the S&P 500 by 13% year to date. That's what this number here represents. I think there is potentially still further upside. I think it needs to take out that 630 level, and obviously 11% upside to work with. Louisiana Pacific, now this has been one of our buy low sell high charts. It has recently met our upside targets, but it has broken out again. So I have updated our chart for our clients to obviously show this new breakout above this $76 level. So we are hoping to see this start to move towards 100, potentially 120 as a best case scenario. It's not one of those names that's going to build momentum and get there in 2 weeks. It's one of those that obviously take a period of months, but it has been a steady outperformer over the course of the last 6 months. Uber, very, very close to another breakout there. I think if we can take out that 82 level, then that brings in those Fibonacci extensions there around 91. Again, stock that we've been bullish on for quite a long time already. This is one of the charts from our client chart book. We've got Caterpillar. Again, we're still working with upside targets. Now, I've been covering this chart on the YouTube channel for a number of months. It just continues to make new highs. First recommended at 250, and we are still working with upside targets around $385 there. Now, Shopify is also a chart that I've been covering for a number of months. It's really done a whole lot of nothing. I'm sure if you are an investor in Shopify at the moment, it's probably been very, very frustrating. I think seeing a lot of other areas of the market rip higher. Shopify now, I think, needs some kind of catalyst, whether that's earnings or revised guidance or something. It just needs something to kind of propel it away from this very, very tight, sloppy range that it's currently in. You can still remain bullish above $70, however, and obviously the hope is that that catalyst comes in. Tesla, big chart. Now, this is a chart that I think I've covered quite a few times as a buy low, sell high opportunity. My thesis on this hasn't changed. Now, for disclosure, I actually put this as a high conviction idea to our clients around 6 weeks ago on pretty much exactly the same thing, same setup here. Just move this over and show you what I was seeing. But it failed, and ultimately the idea ended up being a losing idea, which is obviously something we accept. But it is the same setup, again, buy low, sell high, but now we do have a bullish divergence. So it is a tradable bottom, but what I would just encourage anybody that's looking at tradable bottoms just to apply some kind of risk management process, so that if the thesis of the chart does fall off a cliff and it's wrong, then the damage is pretty minimal. So I've already started to do this. and this is the updated chart that I've put to our clients this weekend as well. Palantir, now for disclosure, I actually own Palantir. My average is around 1950-ish, and I'm questioning for the first time in a while whether or not I want to move on. Palantir, the chart is starting to look quite weak. The frustration that I've had with this one over the course of the last few weeks is seeing the news. Obviously Alex Karp is dumping shares. We've got Peter Thiel dumping shares as well. The chart is now starting to look quite weak. It has been a massive outperformer this year. Let me just be very, very clear about that. So if you've been invested in Palantir, then you've been very well rewarded. It's outperformed the S&P by 22% this year. But the chart is now starting to look quite bearish near term. I'm obviously bullish long term. So I'm going to try and figure out over the weekend what I want to do if there is downside follow through on this chart next week, which I'm still hoping will not be the case. Tencent Music, TME, obviously one of those names aligned with China, is broken out of a massive 2-year base. It's one of those areas in China that has held up really well. If you go and have a look at the charts for Alibaba, etc., they've been completely shit. But TME, I think massive breakout. It is starting to hopefully trend higher, but you do have that Chinese volatility to navigate as well. JP Morgan, very close to a potential breakout again. I like the breakouts above these round numbers. I think the round number concept, $100, $200, $1,000, you quite often get some momentum that comes in above these round numbers. So again, I've been covering JP Morgan for a number of months on the YouTube channel, so I'm still working with upside targets there around $215. Now, I also made a big bottom call on China around 2 months ago, and JD.com has been one of our ideas, and it's worked really well. It's up around 35%. But for those of you that are looking at the Chinese names as opportunity, I think potentially it's basing there, and above $29 might represent a tradable opportunity. But let's just quickly get into Bitcoin and some of the crypto charts. I think with Bitcoin, I understand it's not for everyone. It's not for me. Let me just be very clear on that. I don't buy Bitcoin. I don't buy Ethereum or Solana. I actually use the crypto stocks as my vehicle to express a bullish or a bearish thesis. Coinbase, MicroStrategy, etc. But I put out a tweet just highlighting the roadmap to $1 million for Bitcoin. I'm just using Fibonacci levels. The reason I'm doing that is really because recently the Fibonacci levels, as we can see, hold merit for this particular chart. I think where a lot of professionals, and I even, I'll call out the CMTs here as well, a lot of the professional technical analysts, they pigeonhole their technical analysis and they use the same tools for every chart. Every chart's different. And for me, I like to take the time to figure out what applies to each individual chart. I think that's the luxury of being a professional analyst. We have the time because all we do is look at charts all day, every day. So Bitcoin for me is a Fibonacci chart at the moment. And I think if we take out that kind of 74,000 level, then that brings in the next logical levels. But obviously with crypto, you're going to have to deal with those flash crashes. They are very frustrating, but that's where buy the dip comes in. Ethereum, working with upside targets around 4,900. But there's something I quite enjoy about the crypto space is, and nobody's going to know this, a lot of my clients' members know this, but I've got a mother who's retired, big conspiracy theorist, and she's been dollar cost averaging on Bitcoin, Ethereum, Solana, etc. So she's really enjoying the moves in cryptocurrency, doing very well from it, I might add. But the chart, so I help my mum with the charts on crypto. And the 4900 level, I think, is the next big level for Ethereum. The Solana chart as well is done very, very well. Still working there with that 259 level. But one of the charts that I put out to social media over the course of the last few weeks is just highlighting the relationship, because I think that a lot of folks are looking at the crypto miners, the Bitcoin miners, and wondering why they're not hitting all-time highs along with Bitcoin. And the reason for that is the Bitcoin miners are actually correlated with the Russell 2000 and not with Bitcoin. So if you want to see the Bitcoin miners start to rip higher, you want to see that Russell 2000 chart break out and stay above that 210 level over the course of the next week. So that's something that I'm keeping a very, very close eye on. And obviously MicroStrategy is a big one. But again, why do I use Fibonacci levels? Very, very straightforward. They matter. So MicroStrategy did actually take a little bit of a back seat this week after hitting our upside targets. So it is now range bound, and we'll see what happens with MicroStrategy next week. But I did say at the start that I had a bit of an announcement to make. First off, just please do hit the like button, share and subscribe. But I have added onto the website 20% spring offer on all of our memberships. So that is going to be running for the next few days. But if you are new and you are wondering who I am and what it is I do, please do jump on to our website at honeystocks.com. All of our transparent timestamp work is all laid out. I only use my own charts and data, but we provide memberships to all of our premium work, and what that includes is access to our premium weekend analysis. Also provides access to all of our highest conviction investment ideas, all of our trade ideas. Provide access to our midweek halftime report, which covers just a bite-sized overview of what's happened during the week, along with some more ideas. Provide access to a wonderful community of traders and investors, professionals all across the world. Also provide access to all of our chart books, which cover the most liquid stocks, ETFs and commodities from across the world. And also, if you are new to technical analysis, I also provide access to our complete TA program, which I'm told is very, very good and of the highest quality as well. But just to quickly show you what our highest conviction ideas look like, the charts that I put out as high conviction ideas are all logged on our website, but this is what they look like. This is a recent idea that went out for Coinbase. Obviously we know what Coinbase has now gone on to do. That's the idea that went out for NU Holdings, which I covered that chart at the start. Spotify has been a massive gainer. Valero Energy, that's one of our recent ones, highlighting the breakout potential in energy. Tesla, very, very simple buy low capitulation chart from last year. Another one for Meta. I like to try and identify relative strength and charts at their source. Obviously we can see what a lot of them have done, but I am very, very unique in what I do. I log every single high conviction idea that's ever went out to our clients and members. It's all logged on our website for complete transparency. So please do go and check that out. Make sure that the types of stocks that I like to recommend are the types of stocks that you like to buy. I don't recommend pump and dumps or low quality stocks, but please do check that out. But I think if you are someone that has a mid-term approach and you've got a weeks to months outlook, I think my work's probably a good fit for you. If you're someone who keeps losing at day trading and you can't make that work, and you're looking for something a little bit more stability, maybe look to learn a bit more about technical analysis, maybe you just want to be part of a community and you're sick of hunting around social media for ideas, and maybe you just like to have access to a professional analyst every day, I do provide a community with access to myself every single day as well for chart requests. So please do check out our membership options. Like I said, we do have a 20% off spring offer at the moment, which I'm sure is going to be very, very popular. So whatever you're up to this long weekend, please do have a good one, and I hope to welcome you soon. Thanks very much.